Hello and welcome back to the channel. If you're thinking about buying a home or refinancing, I've got some encouraging updates for you today on mortgage rates and the housing market. First, mortgage bonds have now risen for the third straight day. That's important because when mortgage bonds move higher, it typically puts downward pressure on mortgage rates. The 10-year Treasury yield is also moderating lower, currently heading towards support around 4.59%. So we're seeing some positive movement in the bond market that could translate into better rates for you soon. Tomorrow, the Federal Reserve wraps up their two-day meeting and announces their rate decision. Right now, futures markets are only pricing in about a 1/3 chance of a rate hike, and many experts don't expect the Fed to do anything at all. Former Fed Governor Stephen Miran was on CNBC this morning making some really strong points. He's been one of the more dovish voices, and he explained why the Fed probably shouldn't raise rates right now. He highlighted that some inflation measures are overstated because falling ETF and brokerage fees are actually deflationary. Plus, June's core CPI came in with a negative monthly reading, not exactly a reason to hike. He also noted that unlike 2021, when inflation expectations were rising, they're now well anchored, and the money supply is stable. All of this suggests the Fed may stay patient, which is generally supportive for mortgage rates. Now, let's talk housing, because home values are still climbing. This morning, Case-Shiller and FHFA released their latest appreciation reports for May. On a raw, unadjusted basis, home values rose 0.6% in the month and 2.1% over the past 3 months. Year over year, they're up between 0.8% and 1.1%. Even after seasonal adjustments, the data shows homes are gaining real value, not just seasonal noise. FHFA, which focuses on conforming loans, showed a 0.3% monthly gain after adjustments and a solid 2.2% year-over-year increase. The key takeaway for you as a buyer? Home prices are rising. If you've been waiting on the sidelines, this is a reminder that values continue to appreciate. It may be smarter to get in and participate in that growth rather than continuing to rent or wait and risk paying even more later. On the job side, the labor market is showing some softening. ADP's latest weekly data came in lighter than expected, which could further reduce pressure on the Fed to hike rates. Overall, the combination of stronger mortgage bonds, moderating yields, steady home price growth, and a patient Fed outlook creates a relatively favorable environment for homebuyers right now. If you're in the market, now's a great time to talk to your lender and see what current rates and programs are available. The situation can change quickly, so don't hesitate to reach out if you have questions. Thanks for watching. Drop a comment below with where you're at in your home buying journey, and I'll see you in the next update. Take care.